We have breaking news that could send markets, well, much higher in this upcoming week, specifically to start off the trading day tomorrow. I will explain this news, why it is so positive, and what could happen to markets. Now, we also have a lot of economic data this week. We have a lot of Fed speakers this week. I will go over that data with you and explain the setup that we're in. You can't be, super positive or like guarantee a certain outcome, but we are looking pretty good at this point. And I'll just say that before we actually get into that data. So the news that is coming out today is from Foxconn. The iPhone and AI server assembly giant said December revenue rose 42.31% year on year to 19.88 billion US dollars on strong demand from AI servers and an increase in shipments of key components and growth in automotive related businesses. They said in a statement, fourth quarter revenue up 15.17% versus estimates of around 12%. That is a record high, $64.66 billion. 2024 revenue up 11.37% to $208.2 billion, also a new all-time high. But it's this part here that sounds really good. Foxconn said the first quarter of 2025 should show significant growth compared to Q1 2024, but will track traditional off-season performance similar to the average of the last 5 years. Now, you may be very confused why this is so positive for markets. It's specifically positive for your AI stocks, okay? As we get into January further and then ultimately into February, it's about AI earnings. AI earnings will still be very important. What Foxconn's earnings today really shows is we don't have much to worry about. Foxconn, just December revenue was up 42.31%. That probably means iPhone sales were really good in December. That probably means Nvidia demand was really good in December. And even as Foxconn says, the first quarter of 2025 looks really good as well. So it alleviates some of the anxieties that markets naturally have before an earnings season. Now, if Foxconn were to come out with really bad earnings today or something that wasn't as positive, that would be a bigger issue heading into big tech earnings. But this really says, hey, big tech earnings are going to be good. Now, it doesn't say a lot for industrial, cyclical, small caps, or other areas, but it does say big tech and AI is good for now. It could be really good. These numbers are impressive. Almost 42.5% boost in revenue in December. Yeah, that is pretty strong for the AI story. Now, this all comes at a time where December has actually been a really bad month for markets. The S&P fell about 4% from peak to trough. The equal weight S&P, the RSP, fell about 8% from peak to trough. And still, both of these indexes have quite a bit of room to recover just to get back to previous all-time highs. Now, December was a lot of tax loss harvesting. It was also a lot of profit taking. Now, I'm not super bullish on big tech. This Foxconn earnings that we're getting today is probably going to give big tech a bit of a boost. It's probably going to give Nvidia a boost, going to give Tesla a boost. It's going to give software stocks a boost, but it's probably going to give the rest of the markets a boost as well. Okay, because a lot of that tax loss harvesting, is obviously over with. All of that is over with at this point. And you're going to start seeing more people actually buying back the stocks that they sold for tax loss harvesting. Now, what's also pretty interesting that a lot of people do not consider all too much is Wall Street kind of goes away for the holiday season, right? They kind of go away around December 20th, and they come back in the second week of January. And that's where we are entering this week, okay? Wall Street's coming back to the office. What I think you're going to see happen is a lot of positioning for, different stocks and areas for all of 2025, meaning that if a hedge fund is bullish on, small caps, right? They're going to go position into those small caps. starting this week. Okay. Wall Street's going to do their positioning for this year, a lot of it this week and really over the next couple of weeks. So mix that with tax loss harvesting that is obviously over with, that those positions can start to be bought back. Mix that with the Foxconn news here. I'm pretty optimistic in this upcoming week, but we do have to consider the economic data as well. Let's get into some of the big economic catalyst for this upcoming week. And starting off on Monday, you have factory orders month over month and final numbers for S&P Global Composite PMIs, services PMIs, and manufacturing PMIs. Now, first, starting off on Monday, you have factory orders month over month and final numbers for S&P Global Composite PMI and services PMI. So Monday is a pretty slow day to start off this week from an economic data perspective. On Tuesday, you have the balance of trade, the exports and imports that can affect your GDP estimates. And last we checked, the Atlanta Fed GDP Now tracker was tracking at, 2.4%, which it has recently fallen from almost 4%. So GDP estimates have been coming down a bit, probably a good thing since they've been running so high. On Tuesday, we will get ISM services PMI. Manufacturing PMIs came in really good on Friday, better than expected. That helped markets to move higher. We want to see services come in good also because this is 80% of the U.S. economy, okay? So services, anything above 50 is positive. We are expecting a number of about 54. Last month was 52.1. So you are expecting a jump there in your services PMIs. And then we have JOLTS job openings. Last month, they were at 7.74 million. We're expecting 7.65 million. So expecting a drop of about 100,000. If it comes in, higher, that's probably not good. If it comes in lower, that's what you want to see, but you don't want to see it really plummet. You just want to see it kind of trend lower or even go sideways at this point would be okay. You just don't want to see big moves there because that's really going to fluctuate that unemployment rate a lot. So the JOLT job openings could be big for the unemployment rate that we will get out later this upcoming week. On Wednesday, you have the ADP employment change, the private payroll report, expecting 143,000 jobs to be added in the month of December. Fed Waller will also speak around the same time the ADP employment change is coming out. And then you get the FOMC minutes at 2 p.m. Eastern Standard Time on Wednesday. On Thursday, you will get Challenger job cuts expecting 65,000. Initial jobless claims expecting that to actually come in lower than last week. Last week was 211,000. We're expecting 210,000. And Fed Harker will be speaking on Thursday. Wholesale inventories month over month will also be coming out in the morning. And then you have a lot of Fed speakers Thursday afternoon. Fed Barkin, Fed Schmidt, and Fed Bowman will also be speaking as well between about lunchtime and 2 p.m. Eastern Standard Time. So lots of Fed speakers this week starting up again. And on Friday, you have the non-farm payrolls report expecting 150 to 200,000 jobs. Last month was 227,000 jobs, and the unemployment rate is expected to go up to 4.3%. So that would be a new high for the last couple of years. And the Michigan consumer sentiment is expected to also rise to 75 from 74.0 last month. And if you guys want my opinion on this data, I'm not concerned about it. I think, if anything, it probably surprises to the upside, considering we've gotten a lot of holiday shopping data out from MasterCard and other sources, freight data, right, that suggests that the holiday season was better than expected. I don't think the data is anything to worry about in December. Where you want to be maybe a little bit more concerned, or we will be a little bit more concerned, is February, when we start to get January's data, because that's when you normally see that seasonal, obviously, drop off in activity after the holiday shopping season. But how dramatic will that be this year? I do not know. But overall, I'm not concerned about December's data reports that we will be getting out this week. I think they're probably going to be pretty good. So as I said, I'm really not concerned about the economic data for December. We've gotten like MasterCard spending data. We've gotten the Retail Federation data. We've gotten, I mean, we get a lot of data on the consumer and how they're spending money and all of that. Foxconn earnings basically said, hey, the AI story looks good. Servers look good, right? Big tech's good. Gave big tech a pass. The retail data that we have gotten for the holiday season looks really good. So I don't really see the case to be nervous about the data for this week. Now, Fed speakers will be pretty interesting. What do Fed speakers say about, inflation or about the economy, things like that? I don't think that's enough to derail the markets. I think the Fed wants to keep markets propped up. It makes their job easier and helps to avoid a recession. So, I'm not worried about the data. There's no more tax loss harvesting. AI looks to be on track. And markets are very negative. Even at the time of recording this video, following the bit of a recovery that we seen on Friday, CNN's Fear and Greed Index is in fear territory at 31. I mean, anytime you're in a bull market and fear is this high, you want to be buying that. Same is true for the percent of stocks trading above their 50-day moving average, currently at 38%. Anytime you're in a bull market, 60+% of stocks are trading in a downtrend. You typically want to be buying that unless something changed, right? If just markets sell off, the average stock, it starts to decline like you've seen over the past month, and nothing has really changed, that tends to be a buying opportunity. Okay, because that just means sentiment has gotten more negative than the reality of the situation. And that is what has happened in December. I think, again, a lot of it was just profit taking, a lot of tactical kind of shoring up portfolios, right? But still, 62% of stocks are still in a downtrend following Friday's rally that we've seen. Is very negative. You also have a new multi-month low for the amount of bullish investors. You're actually below your historical average. Historical average is 37.5%. And according to last week, only 35.4% of investors were bullish. So that's 2.1% lower than the historical average. Neutral investors has jumped almost 6% in the last month, from 25% to 30.4%. And bearish investors, while maintaining pretty constant levels, you are up about 3% from early December, from 31.4% bears to 34.2% bears. So, bullish investors are really low. Neutral investors are really high. Bearish investors are kind of high. And, this is far from being bullish, right? This is far from an optimistic market. And I think there is a lot of room for people to get optimistic again, for people to get excited about what 2025 could bring. Okay. Especially around the inauguration, around January 20th, you could see more people get bullish again. You could see people start to focus on the positive Trump policies. And as I said in the last video, right, we're kind of preconditioned to the bearish side already. Specifically in regards to tariffs. We were promised massive tariffs. Well, if we only get something small like a 10% tariff, 15% tariff, that's going to be seen most likely as positive news. And that would be another reason I think markets would be optimistic, because instead of the guaranteed spike in inflation, blah, 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 that we're going to get from tariffs, 10, 15% tariff doesn't exactly mean you're going to see a lot of inflation. And that's kind of been the narrative thus far with tariffs. I've even seen it on Facebook, on my personal Facebook, people that know nothing about economics talking about, what tariffs will do for inflation. No, it's not as simple as that. And I wouldn't be so fast to jump into that narrative for yourselves either. So, as I look ahead to this week, There's not a whole lot I'm nervous about. Obviously, the data is going to be volatile. Jobs report on Friday is going to be pivotal. But I'm just not nervous. Now, January's jobs report in February and February's jobs report in March, that will be more critical because you're after the holiday season. How much, laying off or firing do we see after the holiday season? You also have earning season that starts on January 15th with your big banks and then continues for the next, like 8 weeks after that, okay? So that'll also be a big catalyst. But again, with the holiday season numbers looking so good, I'm just not super concerned there. So I do expect a pretty good week this week for markets. I think markets could actually go crazy under the right set of data that comes out, potentially even giving us a 2-3% gain this week. Like, I would not be super shocked if that happens. A 2% gain on the headline SPY would be to about 604. A 3% gain from here would put us to new all-time highs at about 610. It's not impossible, in my opinion. It could actually be quite likely. So let me know what you guys think about this down below in the comment section. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.